Beyond daily price movements, quarterly corporate earnings announcements serve as the fundamental heartbeat of the market, driving institutional relocations and shaping long-term valuations across key economic sectors. Mumbai was rapidly emerging as a major commercial hub due to its strategic location and the presence of the British East India Company during that era. The need for capital to fund large-scale infrastructure projects, such as railway construction and textile mills, led directly to the introduction of joint stock companies. These expanding joint stock companies needed to raise substantial capital from the public, which sparked the very early forms of organized stock trading in the country. The first recorded instance of organized trading in shares dates to the 1850s, when a group of brokers began trading under a banyan tree in Bombay. This informal group of brokers met in front of the town hall in Bombay, laying the essential foundation for India's very first stock exchange. The year 1875 marked a significant milestone with the establishment of the Native Share and Stockbrokers Association, which later became the Bombay Stock Exchange. The BSE is the oldest stock exchange in all of Asia, formed originally by a group of 22 brokers who traded shares under the banyan tree. The BSE played a crucial role in developing Indian capital markets by providing a structured platform for trading securities and formalizing share transactions. By the late 19th century, the Indian stock market had begun expanding rapidly, fueled by growing industrialization and the establishment of numerous cotton mills. The exchange initially facilitated trading in stocks and shares of cotton mills, providing an organized platform for raising industrial capital across the region. The stock market faced severe challenges during the early 20th century, including the profound economic impact of World War I and subsequent global downturns. Global economic turmoil deepened during the Great Depression, testing the resilience of fledgling financial institutions and stockbrokers across the Indian subcontinent. Following independence in 1947, the domestic stock market gradually rebounded as India initiated new economic policies and industrial planning frameworks for national growth. The Bombay Stock Exchange received formal government recognition in 1957 under the Securities Contracts Regulation Act, establishing its legal operational framework. During the 1960s and 1970s, the Indian government nationalized major commercial banks and financial institutions, aiming to exert greater regulatory control over the financial sector. This period witnessed increased state intervention in economic affairs, shaping how capital was allocated and channeling investments toward priority public sector enterprises. In 1986, the Bombay Stock Exchange introduced the Sensex as India's first stock index, tracking the market performance of 30 major listed companies. The Sensex quickly became the primary barometer of the Indian economy, reflecting investor sentiment and corporate growth across diverse industrial sectors. The Securities and Exchange Board of India, known as SEBI, was established in 1988 initially as an advisory body to oversee capital market activities. The year 1991 marked a monumental turning point with sweeping economic liberalization policies that dismantled the restrictive license Raj system across India. These bold reforms opened India's economy to the world, encouraging both domestic and foreign institutional investors to participate in the burgeoning capital markets. Rapid market expansion also exposed vulnerabilities, culminating in the major 1992 securities scam led by broker Harshad Mehta that rocked the financial system. In the wake of the 1992 crisis, SEBI was granted full statutory powers by the government to rigorously regulate the market and protect ordinary investors. In 1992, the National Stock Exchange was established in Mumbai, introducing modern electronic trading infrastructure to revolutionize Indian capital markets. The NSE eliminated open-cry trading floors by introducing fully automated screen-based electronic trading, dramatically enhancing market efficiency and transparency. Another major leap was the dematerialization of securities in the late 1990s, replacing physical paper share certificates with secure electronic accounts. The NSE launched its flagship Nifty 50 index, tracking 50 of the largest and most liquid stocks across major economic sectors in India. Advanced satellite communications and nationwide terminal networks allowed investors from Tier 2 and Tier 3 cities to participate seamlessly in the stock market. At the turn of the millennium, Indian markets experienced the exhilarating rise and subsequent painful correction of the global dot-com technology boom. Despite the bubble burst, Indian information technology giants like Infosys, TCS, and Wipro grew into global powerhouses, cementing their dominance on local exchanges. Demonstrating incredible long-term growth, the benchmark Sensex officially crossed the historic 10,000 milestone mark in February 2006. The global financial crisis of 2008 struck international markets hard, causing sharp liquidity outflows and a severe downturn across Indian indices. Demonstrating remarkable underlying strength and economic resilience, the Indian stock market rebounded strongly from the 2008 lows within subsequent years. SEBI continuously tightened corporate governance norms, insider trading regulations, and disclosure requirements to safeguard minority shareholders in public companies. Systematic investment plans popularized mutual funds, channeling steady monthly household savings from retail investors directly into professional equity portfolios. Government-backed financial inclusion programs and Aadhaar-based digital identity verification dramatically simplified banking and brokerage account openings. The rapid proliferation of low-cost mobile internet and budget smartphones brought stock trading apps directly into the hands of millions of citizens. The total number of registered demat accounts surged past historic thresholds, fueled by young retail participants entering from smaller towns across India. When the COVID-19 pandemic struck in early 2020, Indian markets suffered an abrupt crash before staging an unprecedented digital-led retail recovery. Lockdowns catalyzed a massive wave of first-time retail investors who utilized downtime to learn equity investing and trade directly on exchanges. Innovative discount brokerages disrupted traditional brokerage models by offering zero brokerage equity delivery and ultra-fast lightning-slick trading interfaces. A wave of prominent Indian digital tech startups and internet unicorns successfully launched massive initial public offerings on domestic stock exchanges. Domestic institutional inflows, led by monthly SIP contributions, provided a massive stabilizing buffer against global capital outflows and foreign sell-offs. With consistent economic growth and soaring equity valuations, India climbed the global rankings to become one of the world's largest stock markets. In a historic milestone reflecting its immense economic ascent, the total market capitalization of Indian stock exchanges surpassed the $5 trillion threshold. A striking feature of modern Indian market growth is the massive surge of investors originating from smaller Tier 2 and Tier 3 cities across the country. Participation by women investors in the Indian stock market experienced exponential growth, transforming household financial planning and wealth creation habits. Cutting-edge algorithmic trading and high-frequency execution systems now account for a substantial share of daily volumes on Indian exchanges. India became one of the fastest major markets globally to implement a T+1 trade settlement cycle, drastically reducing counterparty risk and freeing capital. SEBI deployed advanced artificial intelligence and automated surveillance tools to detect market anomalies, insider trading, and suspicious price manipulations instantly. Environmental, social, and governance criteria gained immense prominence as Indian corporations accelerated investments in renewable energy and green infrastructure. Government production-linked incentive schemes spurred domestic manufacturing, attracting global supply chains and boosting industrial stock valuations. The introduction of infrastructure investment trusts and real estate investment trusts enabled retail investors to fund large-scale toll roads and commercial real estate. With over 150 million trading accounts, retail investors now act as a formidable counterweight to foreign institutional capital flows. Indian equity indices achieved deeper integration with global financial benchmarks, attracting sovereign wealth funds and international pension portfolios. Nationwide financial literacy campaigns by regulators and fintech platforms empowered citizens with essential knowledge regarding risk management and long-term compounding. From humble 19th century gatherings under a colonial banyan tree to a high-speed digital powerhouse, India's stock market history reflects the nation's unstoppable economic ambition. The remarkable evolution of Indian capital markets demonstrates how institutional reforms, technological innovation, and retail participation created one of the world's most dynamic financial ecosystems. As India marches toward future economic milestones, its stock exchanges remain the vital engine channeling savings into productive enterprises and fueling national prosperity. Explore more historical deep dives and financial analyses by subscribing to our channel and sharing your thoughts on India's extraordinary economic journey below.